The biotech industry is the best performing industry group in the US year to date, and a lot of ETFs are focused on the area. Here to tell us more is James Seyffart, Bloomberg Intelligence ETF analyst. So James, what are some of the ETFs available in this space, and how do they differ?
Yeah, so as you mentioned, there's a lot of ETFs in the space. Solely on healthcare, you're looking at 50. And if you subgroup it to biotech, you're looking at 20 different ETFs on the biotech grouping alone. And if you're looking at just passive rules-based index, you're looking at an 18% dispersion from top to bottom. So the top performing Virtus BBP has returned 30%, and the lowest lone car CNCR has returned 12.5%, which is roughly in line with the S&P 500. Now, there's such a huge dispersion because of all the different ways these things are sliced and diced. So the first way is the levels of drugs that these companies are offering. You can slice it into companies that have drugs in FDA trials, or you can slice it into companies that are still already selling drugs to consumers. Another way is a type of drug. One example is immunotherapy, which targets drugs that use your immune system to fight cancer. And the last way, which is largely one of the big determinants of return, is portfolio weighting. So if you look at the two biggest ETFs, the largest is market cap weighted, the second largest is equal weighted, and biotech has been a huge hotbed of activity for M&A. And what happens when you equal weight is you have more weighting to those smaller companies, and over the past 10 years, that equal weighting has caused a 50% outperformance of the market cap weighting.
Oh.
Because of the science, there's quite a big dispersion within the biotech community in terms of performance. What you've been talking about is passive. So what about actively managed ETFs?
Yeah, so actually the best performing biotech ETF, if you look in the broad space, is an actively managed ETF, ARKG from ARK. It's focused on the genomic revolution, which is this space where we have cut down the cost dramatically from mapping the human genome, and there's a lot of benefits coming from this. So it invests in the companies that are driving that change and the companies that are likely to benefit from that, and that ranges from drugs to any other number of things. And what's happened since, based on this success and returns and assets that this ETF has gathered, some competitors have come in. So, for example, Goldman has launched an ETF just recently that focuses on the same type of area, and iShares just filed yesterday for an ETF that's going to focus on this same area.
What about geared portfolios?
To play this industry.
Yeah, so another area is leverage ETFs, which are very common for traders. So this ETF industry, biotech specifically, has 6 ETFs, three pairs of long and short ETFs on biotech. And the best performing ETF on US exchanges right now is Direxion's 3-time levered LABU, which is a 3-time levered daily portfolio of that equal weighted portfolio, and it's returned 85% year to date.